Good morning, everyone, and thank you very much for joining me. This is the morning market review, and it is 2 days off here. It's Wednesday. It's the 19th of October. I beg your pardon. So this should read Wednesday, 19th of October. I'm a senior market specialist at FXCM, and my email address rshort@fxcm.com. And I'm just going to bring up our disclaimers. I'll keep this on screen for a few moments. Hey Zanetta, good morning to you, and lovely to have you on the webinar as always. Thank you very much for joining. Good morning to everyone that's logged in. Thank you very much. I'm just taking a look at the inflation out of the UK, and it's back into double digits. So the headline number is 10.1%. The previous was 9.9, so we're back into those double digits. The core number is hefty as well, came in at 6.5 compared to 6.3 previous. I think there's going to be some news around that. Let's just bring up market commentaries disclaimer. When I say news, I think the sort of fragility that we've seen over the past month just may amplify this this inflation print. I'll just keep this commentaries disclaimer on screen for a few moments. Can I just double check, by the way, that you can see the screen and that you can hear me? Again, I have this paranoia that I haven't set it up correctly. Okay, cool. Thanks, Anissa. Okay. Excellent. Thanks, guys. All right. Just bringing up the references. All right. Anil asking to enlarge it. That is a very good point. I'm not quite certain how to do it. It's on a browser. Does it help? Not really. All right, and then if you have any issues with the charts, just let me know. The charts I can certainly make larger. All right. So the references, MarketScope, TradingView, and Bloomberg. I'm just going to put this this on screen while we go through the Bloomberg email 5 things to start our day. And then we'll take a look at this chart and we'll see if we can make some sort of sense of what's happening in the markets, which, in my opinion, are very difficult at the moment. The first headline in the Bloomberg email is Bank of England. The Bank of England will start its delayed bond sales early next month, but will initially exclude the long-dated debt at the heart of recent market turmoil, following the government's ill-fated fiscal plans. The announcement of so-called quantitative tightening is a statement of intent from the central bank, which has been on the defensive for weeks after fallout from massive unfunded tax cuts forced it to start buying gilts again to avert a fire sale by pension funds. Starting QT is the next stage for Governor Andrew Bailey and puts the inflation fight back at the center of the bank. So again, I think that's a very important comment that we've just read. Quantitative tightening is really is, I think, effectively an X factor. How does the central bank quantitative tightening affect economics? The quantitative easing is one of the key causes of the inflation that we're seeing right now. QT is an unconventional monetary policy, but of course it seems a natural follow-on to quantitative easing. The Fed is currently unwinding close to $9 trillion. The ECB is going to embark the BOE. All these variables make the analysis quite complex. So we're going to have to try and stay on top of that. Next headline reads revenue surge. Rates and currency traders just handed Wall Street's trading desks their best third quarter ever. Fixed income trading revenue at the 5 largest US banks surged 22% to 15.8 billion in the period, trouncing analysts' estimates. Now, this is very interesting just because fixed income is in this massive bear market. We've looked at it previously. The bond market's just really fallen off a cliff. So very interesting that the revenues there are surging. That combined with a 10 billion equities trading haul handed the firms their third best quarter for the business on record. The better than expected results were largely fueled by stronger performance on desks dedicated to buying and selling interest rate and currency products. Those asset classes have seen a surge in volatility as the Fed embarked on an aggressive plan to raise interest rates to temper inflation in recent months. And I think that last sentence is super important. A lot of information there in that the banks responded to the QT, right? So just kind of a cause and effect there. And now we've just read in the earlier paragraph, the BOE is going to start its QT as well. So very interesting sort of causation there. Next headline reads, can't pause yet. The Fed can't pause its campaign of monetary policy tightening once its benchmark interest rate reaches 4.5% to 4.75% if underlying inflation is still accelerating, Minneapolis Fed President Neil Kashkari said. Core service inflation, which is the stickiest of all, keeps climbing and we keep getting surprised on the upside. Kashkari said Tuesday during a panel discussion hosted by the Women Corporate Directors Minnesota chapter. I beg your pardon, Kashkari was speaking during a panel discussion hosted by the Women Corporate Directors Minnesota chapter. Investors currently see a peak around 4.9% early next year, according to prices of futures contracts. The Minneapolis Fed chief, who before the pandemic was known as the Fed's most outspoken dove, has emerged this year as its biggest hawk. From our point of view, we're going to carry on monitoring the median inflation, and we'll take our cue off the median inflation. And of course, it's showing that inflation is incredibly sticky at the moment. It hasn't moderated one iota. So we'll just keep an eye on that. The next headline, very interesting as well, and it reads, emergency reserves. The Biden administration plans to release 15 million barrels from US emergency reserves and may consider significantly more this winter in an effort to ease high gasoline prices that have become a liability for Democrats in next month's midterm elections. President Joe Biden will announce the plan Wednesday. In the final tranche of oil from a program the White House began in the spring to release a total of 180 million barrels of crude from the Strategic Petroleum Reserve to address high gas prices stemming from Russia's invasion of Ukraine, among other factors. Biden's team is keeping all options on the table to ensure stable domestic fuel supplies, a senior administration official said. So I was watching the markets yesterday. Oil actually was tanking quite notably off of the release of these reserves. So that was happening yesterday. All right, just another few points to make here. Next headline, Tory rebellion. Embattled UK Prime Minister Liz Truss faces a brewing parliamentary rebellion if she is forced to abandon a key Conservative manifesto commitment on pensions as part of a frantic austerity drive. Chancellor of the Exchequer, Jeremy Hunt, has refused to guarantee that he will stick to the Tories' election pledge to raise the state pension in line with the highest of either inflation, wages, or 2.5%, known as the triple lock. The uncertainty on pensions comes as government departments were told by the Treasury to find savings of up to 15% on their budgets. It poses a new political problem for Truss and Hunt, with many Tory members of Parliament representing large numbers of older constituents who typically form their core voter base. And then just the last points to be mentioned here, coming from the email. The European stocks are on course for gains, while Asian shares wavered and US equity futures climbed as traders digested corporate earnings and the impacts of higher rates. So Netflix actually came out yesterday, and the results were good. Kashkari, along with other Fed presidents, Charles Evans and James Bullard, take part in separate events. UK inflation, well, it's been released now, so we've seen that. We're going to see earnings from Tesla, Procter & Gamble, Atlas Copco, etc. All right. Just taking a look at this chart here, we've got the real rates in the top, and we've got the Dow Jones at the bottom. The reason I brought this up was just an article I wrote yesterday, just on the correlations here. I think they are fairly obvious. You've got the real rate moving up, and this is into September. You've got the Dow Jones coming down as a reaction. Then you've got the real rates stabilizing. This is on the daily chart. At the same time, you've got the Dow Jones stabilizing. And now the question is, well, which way are real rates going to go? So I have put a down arrow, but question mark. And if the real rates go down, question mark, then it seems that the Dow Jones likely has some support. That's why I've got an up arrow here, question mark. But this over here, this down movement in real rates is certainly not guaranteed. The reason that I think we are looking to push down is because when we go to the weekly, so I've just changed this to the weekly. I'm going to get rid of the Dow for now, and I add in the RSI, and we've seen this before. The RSI is frothy. It needs to moderate. It's still over this 80 level, and as long as it stays over that 80 level, I think there is a ceiling somewhere above, but of course that is sort of just a thought. The normalization of the RSI would tend to suggest a moderation in the real rate, and I think that that combination with earnings season is makes Q4 exciting on the one hand, very difficult on the other hand, because we've had we all know we've had just an absolute awful year on the risk markets. But just to sort of kick off the analysis, what happens if we get the moderation here? Netflix results surprised me, but they showed some growth. What was interesting about the Netflix results, by the way, is that given dollar strength, although there's been growth in subscribers, revenue per subscribers dropped from regions outside of the US once you make the exchange rate conversion. So you can see how exchange rates affect international companies. So you've got growth in numbers, but lower revenue per subscriber. Isn't that interesting? All right, so this is, I think, this chart we're going to look at every day to start. Just want to see if we get the moderation here. With that at the forefront of our minds, let's take a look at market scope and see if there is some opportunity for us. All right, so getting this across was a challenge. All right, look, I think this is the last chart I was looking at yesterday. This is oil. This is the weekly oil chart. I think it's worth just having a quick gander at it. It's the WTI proxy, and you can see this is where the oil price reacted to the 2 billion, the announcement of a cut of 2 million barrels per day. And what we suggest is, well, it looks quite, it looks like quite a big reaction, but the point was, wait a second, we still got lower peaks, lower troughs. And if we just add in the LP here, so the deck's just open, so I'm having the system's just hanging for a moment. There we go. Okay, so we've got the LP. Here's the next lower trough, LT. Okay, and then the production cut. Well, that still looks like an LP to me, but this is question mark. This is question mark, LP question mark, because we don't have a reference candle here. And this is a complex reference candle. Anybody that who uses their reference candles, you can see that the sheer size of this candle, the range of it, makes for complexity, because when do we move underneath here? So we've already had 2 weeks and we haven't got the reference candle reversal, but it looks to me as if there is a strong possibility of a lower peak there, especially since those reserves are coming in. And if we go down to the daily chart, we've moved from zone 1 into zone 2, and I guess the question now, with the introduction of those reserves, do we move into zone 3? And I think that is something to keep an eye on. What would be a reason for oil strength? What would be a reason for oil strength? And that, I think, would be a Q4 dead cat bounce. Because if we get a sense of bullishness in the risk markets, I think there could be an interpretation by oil traders that the demand destruction has ended. And if that is the interpretation, well, we might not quite get that 40 to zone 3. So let's just unpack this. There is certainly a downtrend on oil. Go down to the daily. We've certainly fallen from zone 1 into zone 2. There's the weakness. Where are we right now? No man's land. So now, does the release of oil reserve push us into zone 3, or if we get a dead cat bounce, do we go back into zone 1? So oil's a complex instrument. Take a look at the stochastic, no man's land. So very difficult to get a bead at the moment. And when it's difficult to get a bead, well, it's probably worth skipping it, moving on to something that's more workable. Just go through to the dollar. I will start from the top. All right, so we can take up the question mark. This is a higher trough because we've got the confirmation here, right? But this is going to take its lead off the real rate. So we've got this uptrend. We've got exceptionally strong momentum, but we have slipped. We've slipped from zone 1 into zone 2, and that's the problem. No man's land. Okay, so right now you can see the uncertainty in oil. You can see the uncertainty in dollar on a daily basis. And this is the environment we've got to try and form our decisions, our trading decisions. Very tough, isn't it? So even the momentum, no man's land. So are we going to go back into zone 1? Are we going to see the correction in that real rate? If we get that correction in the real rate, we go back into zone 2. Now, the fact that the dollar is in no man's land, the fact that oil is in no man's land, it's not really serving us well right now. We need some sort of clarity here. What we can say is that we've got ambiguity, right? Trading in an uncertain environment always means heightened risk. If there's heightened risk, means stop losses, risk management, whilst always important, really become the most important. Okay, I don't think I've worded that correctly, but the point is just the uncertainty requires a concentration on risk control. So we've got uncertainty on US dollar. Let's go down to euro now. Okay. And this is interesting as well, because euro, well, it's trying desperately to get into zone 1, and it did actually close in zone 1 over here, but it's slipped. Okay, so there's a bit of ambiguity here as well. That's not surprising because it's getting a large part of its Q from the dollar, but the dollar is in the middle of zone 2. So for this week, trading is tough because we are sitting in no man's land in all of the charts that we have examined so far. There's no clear bias, and when there is no clear bias, it makes life for traders harder. Go down to the weekly chart. You can see that, of course, the euro is in downtrend. That makes sense because the primary dollar trend is up as well. So to see the different trends, it makes sense. But it's the current positioning on the daily which is making life tough. Where's the momentum for euro? It's in the middle of no man's land. We're right above 50. I don't know. We're slightly above 50, so maybe there's a slight bullishness to it. Okay, but this is all now trying to get its cue from the interest rate. Okay, from the real rate. We've got a whole lot of Fed speakers. Neil Kashkari, we read about earlier, who is saying, look, it's full steam ahead for us. We haven't seen any moderation in the median CPI. Are we in fact going to get that pullback in the real rate? And I think a lot of market participants are looking for a pullback in the real rate, but it's the inflation data seems sort of antagonistic to that type of scenario. So which wins out? The overbought condition, the technical correction, or the fact that the Fed remains aggressive? I think as we get closer to the 2nd of November, we get clarity there. But I'm also of the opinion that once we get the rate decision out on the 2nd of November, it may be a kind of a buy the rumor, sell the fact. In other words, that's when we might get the moderation in the excess on real rates. Again, I don't want to make this a forecast. It's just kind of thinking of a possible scenario, and we'll have to adjust as the as the charts and the news comes out. As Zanetta just writing here that there's also going to be the CPI coming out of the euro, and that's 10 a.m. UK. That will be 11 a.m. ZA. The forecast there is at 10% on a headline basis, 4.8 on a core basis. So again, a data point right there that I think everyone needs to be aware of. So thanks very much, Zanetta. Let's go through the cable, see how cable is behaving after this inflation number that was released this morning. All right. There's perhaps a little bit more of a bias to the upside here in terms of just the stochastic positioning. But having said that, the chart itself is just showing an inordinate amount of resistance between 113.50 and 114. For 4 days, we hit this level and it was rejected. And it's just maybe like that. So with this resistance, and that seems to be quite strong, and the fact that there has been reactions, cable in of itself just not being able to move with any sort of definitive price action into that zone 1. So where are we? We're right on the border of zone 1 neutral. So again, this is just a reinforcement of the uncertainty we are in the middle of a market that is battling to find some sort of direction. So cable just adding, in my view, just adding to the difficulty that we're facing in the current market environment. Let's just take a look at it on a weekly basis. Okay, so you can see the resistance here. This I'm still keeping as LP question mark. By the way, what's interesting here is this candle. This could be a reference candle to the upside. Can you guys see that? But we'll see. Okay, a lot of variables influencing cable at the moment. Okay, I want to go to DAX, and then I wanted to show you Nasdaq. I did trade Nasdaq yesterday. I actually used the day trading method, and so I'll just at the moment I don't have any positions on, but I'll just go through the trade yesterday. Before I do that, let's just go into DAX. All right, so we can see lower peak followed by the lower trough. So the DAX on a weekly is in downtrend. Okay, and the question is where's the LP here? And if there is going to be a pullback on the real rate, I would suggest maybe the LP is higher, to the point we might even get a higher peak here. So that's why we'll keep the question mark in. If we go down to the daily, there's a little bit more certainty in terms of momentum. So whereas oil, no man's land, the currencies generally have a neutral feel about them. The DAX actually quite nicely into zone 1, right? And on the daily, there is a momentum pickup here. Now, I don't know how long we're going to stay above 80, but the longer we stay above 80, the more bullish momentum will be underlying. And it's interesting because you've got this big gap up. There's a gap open here. We've got a pullback. So we've got a red candle for today. That's interesting, okay, because the Bollinger's are also starting to expand here. So there is certainly a discussion to be had about, well, the bullish volatility seems to be making itself sort of known as we get the results coming out of the US. If we go down to the hourly, all right, now we can start monitoring for potential triggers. Okay, so we pulled back. We actually got two gaps here. Got a gap there, and we've got a gap here. Okay, so there's two gaps. So we've pulled back now to the central pivot, and this is actually an interesting level because there is a confluence of support here. You can see price support over the pivot. What would be interesting is, of course, we get the support holding, we get the crossover of the EMAs, we get a crossover of the stochastic, and then we get a push into the upper quintile, and that upper quintile holding, and then there could be something on here in terms of the zone 1 position. So there is a dip in the uptrend here that I think is worth keeping an eye on. Again, even if there is no signals here and it drops to S1, well, S1's then probably a good level to keep an eye on. Let me just bring up Nasdaq. Joachim's asked about the crypto webinar. Yeah, let me slip my mind. Losing my mind a bit, Joachim. All right, yeah, we'll switch. Let's just have a quick word about Nasdaq, and then we'll switch to the crypto. All right, so certainly the momentum for Nasdaq is down on a weekly basis, okay, but we are starting to see a movement up. So you can see the relative movement here from zone 3 into zone 2. Bullishness showing on DAX, maybe kind of suggesting there is something to be said about a movement into zone 1 here. So I think it's worth keeping an eye on, especially considering the prospect for an interest rate reversal. This hold here, I'm going to conclude. I want to apologize. I feel like I'm on Tuesday when it's Wednesday. So thank you very much for reminding me, Joachim. I'm going to go across to the crypto minute. Thank you very much for reminding me. I'll see you guys across on that webinar. Cheers, guys.